Good morning. We are the Group V and we will be presenting the Government Service Insurance System or the GSIS. To truly understand GSIS, we need to relook its history. The Government Service Insurance System or GSIS was established on November 14, 1936 by the Philippine Congress through the Commonwealth Act No. 186 with its primary goal of promoting the well-being of government employees by providing an insurance system that protects their members from any of the possible financial consequences of death, disability, and old age. On May 31, 1977, the Revised Government Service Insurance Act of 1977, or Presidential Decree No. 1146, was issued by President Ferdinand E. Marcos. Subsequently, on June 24, 1997, Republic Act No. 8291, or otherwise known as the Government Service Insurance System Act of 1997, was enacted into law to enhance the Social Security coverage and benefits of the GSIS. Although officially, GSIS started its operations on May 31, 1937, with the life insurance program as its only business, and was transformed into a much more comprehensive social insurance scheme in 1951 with the addition of old age, invalidity, and survivor benefits. So you must be thinking now, what does GSIS really do? But before that, let me explain what GSIS is. GSIS is a government financial institution made to administer its funds and implement laws that govern the social security and insurance benefits of all government employees, which means they provide social security coverage to employees in the public sector by protecting its members of the possibility of certain unforeseen events such as a natural disaster in exchange for their monthly premium contributions. The GSIS also manages the Employees Compensation Program, which provides for work-related Social Security benefits for the public sector, and the General Insurance Fund, which provides non-life coverage for all government-owned properties. GSIS is a social insurance institution with a defined benefit plan, as stated in its charter. The GSIS is entrusted with the administration of the General Insurance Fund by virtue of RA 656 of the Property Insurance Law to provide comprehensive insurance coverage to assets and properties that have government insurable interests. GSIS members are entitled to an array of social security benefits such as life insurance benefits, separation or retirement benefits, and disability benefits. Now, to which government employees does GSIS cover? The GSIS covers all government workers except members of the Judiciary and Constitutional Commissions who are covered by separate retirement laws, contractual employees who have no employee-employer relationship with their agencies, uniformed members of the Armed Forces of the Philippines or AFP, and the Philippine National Police PNP, including the Bureau of Jail Management and Penology BJMP and the Bureau of Fire Protection BFP employees, as well as barangay and sanggunian officials who are not receiving fixed monthly compensation. Employees who do not have regular monthly hours of work and are not receiving fixed monthly compensation are not included.
So, compulsory membership. So, Section 3 of RA 8291 states that GSIS membership is compulsory to all government employees who receive compensation from the government. So, examples of these agencies are DTI, BIR, DENR, DepEd, and much more. So the membership is compulsory to those who are not yet of the retirement age and regardless of their employment status. So exceptions to these compulsory membership is first government agencies like the AFP and PNP rather. And this is because during their service or during when they were still working under those agencies, they did not pay any contribution, and once they are retired, they receive exactly the same salary as when they were still at service. So that is why, and that there's a separate funding for that. And then the second is those who have yet to settle an obligation, and the third is no employer-employee relationship. So maybe an example would be a janitor working for DTI that was hired through a private agency. So the janitor there's no employee-employer relationship between the janitor and the government, but rather there's an employee-employee relationship between the janitor and that private agency. So yeah, that's it for compulsory membership. So what are the requirements in order to be a GSIS member? So first, we have two applications of membership, or the membership application form that you have to fill out. The next is the NSO security paper. Next is a birth certificate, and then a service record, and a copy of appointment, plantilla or a contract of service, and then lastly is a payslip or a copy of a certified copy of a premium payment. So it is important to note that service record is for reinsurance with matured policy, and that you have to present the original copy or a certified photocopy certified by the admin. So the following slides will be pictures of those documents. So first we have the membership application form, or form number MIS 0502. So this is how it looks like. If you have to fill it twice again. And then next is a birth certificate. So a birth certificate can be acquired online. It is from the original office there in Manila, and it will take time to arrive if you're not from the Luzon area siguro. And then you can also secure one locally, and here in Cebu, it is near Gesano South. And then next we have a service record, and this is a copy from DepEd. So the contents of a service record are the employees' activities and accomplishments. So it certifies that you are really an employee of that agency, government, or that company. And then next is a copy of appointment. So this is how it looks like. And next is a plantilla. So plantilla is a government approved listing of the positions in that agency. And then next we also have the contract of service, and this is how a payslip looks like, and that's it. And if there are additional if government employee is an elective official, so there are two additional requirements. So first is the oath of office. This is the oath you will take before you perform your duties. And then next we also have the COC, or the certificate of canvass. So this contains the voting, the listing, and the candidates. So that's it. So enrollment for a GSIS e-card or the UMID. So this allows you to transact with GSIS. So it is the official GSIS ID, and this is only exclusive for pensioners who are based in the Philippines only, so not allowed any other countries. So the first step is to present two valid government issued ID. So as mentioned earlier, these are the LTO license or the driver's license, also your PRC license, voter's ID, and the passport. So the second step is to fill out the enrollment form. So a GSIS personnel will assist you, and you have to submit it to them. And in the form, there are only two banks that permits you to that is in collaboration with the GSIS. So these are the UBP, or the Union Bank of the Philippines, and Land Bank of the Philippines. So you can only choose those two, so either where you prefer among those two. And then the third step is to wait for a text from GSIS. So it will contain where you could claim your GSIS e-card or the UMID or a temporary ID if not yet available. So upon receiving the e-card or the UMID, the first step is to go to a nearby GSIS wireless activated processing system kiosk located in provincial capitals, city halls, government and municipal offices, GSIS branches, and lastly, Robinson's outlet, so any of those. And then the second step is to insert the card into the kiosk card reader. And then the third step is you have to, in the screen, you have to select any of the pre-registered fingers. So example, your thumb, any of these 5 fingers. And then in the fourth step, you have to, example, you selected the thumb. So in the fourth step, you have to touch it to the screen in order to activate it. And in case it fails to read your thumb, you can choose the rest of the 4 fingers. So you could activate your card or your UMID. And as for temporary IDs, there's only one step, and that is to present a 2 valid government issued IDs as mentioned earlier, and you will just give it to the lobby officer, and they will be the one to activate it for you. So you can transfer from Union Bank to Land Bank, but you cannot do the vice versa, which is from Land Bank to Union Bank. And what are the steps to take to transfer from Union Bank to Land Bank? So the first step is to wait for a message from Land Bank saying that you can now claim your issued card from them. And then the second is to present 2 valid government IDs, which was previously mentioned are the PRC license, the LTO license or driver's license. We also have the voter's ID and passport. And then the third step is to activate it immediately. So to save time and so you don't have to go back and forth between the location or the kiosk. So just activate it immediately, and it can only be done once. And then the next few slides will be the sample of UMID and eCard. So first we have UMID. So this is the front side of a UMID, and then on the left side is the 2011 to 2015 issuance, and it was further developed and for security purposes, which is why we have the 2016, and until now it is still used as this is the format that is used. And this is the back side of the UMID, and it has the 4 agencies which are the SSS, Pag-ibig, PhilHealth, and of course GSIS. So this is the front side of a GSIS e-card. So it contains your pictures, a visa sign, your number, and all those basic details like a bank card.
So let's talk about the contributions in the GSIS. So GSIS provides a benefit plan that will protect its members against unfortunate events such as death, disability, old age, retirement, and separation. However, to avail such benefits, the Republic Act 8291 provides that the regular members must pay for monthly contributions that will be deducted on their monthly compensation. The regular members are employed by the government of the Republic of the Philippines, and they are the employers or government agencies and employees or members. So effective June 24, 1997, the amounts of contributions of the regular members will be based on their average monthly compensation or AMC. It is computed by dividing the aggregate compensation received during the last 36 months before retirement or separation, or if less than 36 months, then by the number of months the compensation is received. Further, the Act stipulated that AMC will not exceed 10,000 pesos. Thus, if the monthly compensation of a member and government agency covers the maximum AMC limit, which is 10,000 and below, then the percentage used to account for their monthly payment of contribution is 9% and 12% respectively. Let us say, for example, 8,500 monthly compensation. So the 9% of 8,500 is 765. Thus, that is the amount of premium contribution of the member. On the other hand, the 12% of the 8,500 is 1,020 pesos, and that will be the contribution of the government agency. But if the monthly compensation is over the maximum AMC limit, then the percentage to be computed will be 9% for 10,000 plus the excess amount will be computed by 2%, while the computation for the government agency will be still the same of 12% rate of contribution. However, that is before, because the GSIS Board Resolution number 152 issued the implementation of removal of the AMC limit effective on January 1, 2003. Hence, the members and government agencies must pay for their monthly contribution based on their actual salary accordingly to the scheduled rate of 9% and 12% effectively. Moreover, the government agency should ensure that all necessary contributions for government share and all amounts owed to GSIS include in the computation of their respective annual budgets. Also, they must deduct from their established monthly compensation the personal share of the employees and remit the same to GSIS. They are also not allowed to delay remittance or premium payments, and even more to use it for other purpose. Aside from the premium contributions by the regular members, the Republic Act 8291 further required that the special members, which includes the constitutional commissioners and the members of the judiciary, to pay for life insurance premiums with the rate of 3% that will be deducted from their monthly compensation and to be paid for both employee and government agency share. So they are compelled to remit regular monthly contributions for life insurance policies to the GSIS as a return of the benefits that they receive from them. Next is the remittance of contribution. It is stipulated in Section 14 of Rule number 3 that within the first 10 days of the month following the deduction of contributions to the compensation, each government agency must remit the employees and government agencies' share contributions directly to the GSIS. Also, the government agency is required to deduct from the fixed monthly compensation of the employee the loan amortizations, premium payments, and other amounts payable to the GSIS. In like manner, the member shall also ensure that the deduction of premium contributions and other amounts owed to GSIS in his salary is immediately remitted to GSIS. And lastly is about the sanctions for delayed remittance. As provided by the law, the government agency who fail to include contributions in their annual budgets or fail to remit the exact amount of contributions by the deadline or delay the remittance of contributions to the GSIS will be penalized, and the interest of 2% per month shall be charged to the government agency for each month of delay in remitting monthly contributions and other sums owed to GSIS. On the other hand, all the privileges to the members will be suspended and shall be disqualified to collect yearly dividends as the consequence of non-remittance of contributions. Moreover, the unremitted contributions, loan amortizations, and other sums owed to the GSIS will be deducted from the proceeds of the loans and claims payable to the member. So that is all about the contributions in the GSIS.
For Chapter 3, Benefits and Programs, first we have the life insurance. There are two types of life insurance. Compulsory life insurance benefit under the life endowment policy, which is the ELP. A member under this policy may be entitled to any of the following benefits, depending on the circumstances. Maturity benefit, which is the face amount payable to a member upon maturity policy. Second is death benefit, which is the face value of the policy to be designated beneficiary or legal heirs in the absence of the former upon the death of the member. In addition, with the death benefits, we have the accidental death benefits. It is an additional benefit equivalent to the amount of death benefit when the member dies by accident. In this connection, proof must be presented to sufficiently establish that the cause of death was accidental. and approved to show that the death was accidental shall prescribe if the claim of the ABD is filed 4 years after the death of a member. Second, we have the compulsory life insurance benefit under the Enhanced Life Policy, which is the ELP. A member under this policy may be entitled to any of the following benefits depending on the circumstances. Death benefits, equivalent to the latest annual salary multiplied by the amount of insurance factor, which is 1.5 or 18 times the current monthly salary of the member as determined by the GSIS, payable to the legal heirs, less all outstanding obligations of a member in accordance with the CLP. The termination value is equivalent to the percentage of monthly life insurance premiums as determined by the GSIS, due and paid in full, either by direct remittance or through APL facilities. The accumulated termination value will grow to such rate as determined by the actuary. The termination value shall be paid to the member upon his separation from the government service, less all indebtedness of the member with GSIS in accordance with CILP. So up next we have the retirement benefits. Under this act, the retirement benefits consist of the monthly pension, which is computed based on the year of creditable service in AMC for at least 3 years. Eligibility has rendered at least 15 years of service, at least 60 years of age, and does not receive monthly pension benefit from permanent total disability. So, processing of retirement benefits of a member who died while their claims are being processed for those qualified retirement benefits. In case the deceased member failed to indicate in his or her retirement options, it shall be computed as if he or she opted for immediate pension. Next, the proceeds of retirement benefit shall be paid and distributed to the legal heirs in accordance with the law on succession under Civil Code of the Philippines. For those not qualified of retirement benefits, the GSIS shall determine if he or she is qualified to other applicable benefit under RA 8291 or such other laws administered by the GSIS. So we have computation of average monthly compensation. The AMC shall be computed on the basis of the average salary of a member for at least 36 months of creditable service immediately preceding his retirement separation. Computation of revalue monthly compensation equals AMC plus 700 pesos. So next, computation of basic monthly pension. The formula for computing the BMP may be adjusted subject to the approval of the board upon the recommendation by the president and the general manager. As a general rule, the BMP shall only be computed for those members or heirs of members who are eligible to receive benefit under this law. It shall be computed on the basis of a percentage of the RAMC at the rate of 2.5% for every year of creditable service, but not exceed 90% of the AMC of the member. So the formula for computing BMP shall be BMP equals RAMC times 2.5% times RCS equals 2. So adjustment or increase in pension, periodic adjustment of the monthly pensions of all existing pensioners shall be done on the basis of what is suitable and prudent for the GSIS as recommended by its actuary and approved by the board. So next we have the separation benefits. It's either one of the following for those members who are separated from service and who have at least 3 years of service but less than 15 years shall be entitled to cash payment equivalent to 100% of the member's AMC for each year of creditable service but less than 12,000 payable upon reaching at the age of 60 or upon his separation if he is already 60 years of age at the time of separation. So next, we have the processing of separation benefit of members who died while their claims are being processed. If the member dies during the pendency of his claims for separation benefit and he has rendered at least 15 years of creditable service, his legal heirs shall be entitled to receive cash payment equivalent to 18 times the basic monthly pension plus accrued BMP. So if any up to date of the death of the member, thereafter the primary beneficiaries shall be entitled to survivorship pension. So if the member dies during the pendency of his claims for separation benefit and he has rendered less than 15 years of creditable service, his legal heirs shall be entitled to cash payment equivalent 100% of AMC for each year of creditable service, but not less than 12,000 pesos. So up next, unemployment benefit. A member shall be entitled to unemployment benefit if the following conditions are met. Duration and payment of unemployment benefit. The amount of unemployment benefit is equivalent to 50% of the AMC and shall be paid in accordance with the following schedule. For the contribution made benefit, 1 year but less than 3 years will have a duration of 2 months. 3 or more years but less than 6 years will have a duration of 3 months. 6 or more years but less than 9 years will have a duration of 4 months. 9 or more years but less than 11 years will have a duration of 5 months. 11 or more years but less than 15 years will have a duration of 6 months. Those entitled to more than 2 months of unemployment benefit shall initially receive 2 monthly payments. A 7 days waiting period shall be imposed on succeeding monthly payment to determine whether the separated member has found gainful employment either in the public or private sector. In case of reemployment, all accumulated unemployment benefit paid by the employee during his or her entire membership with the Gsis shall be deducted without interest from the separation or retirement benefit, as the case may be, to which of the member may be entitled to upon his voluntary resignation, separation, or retirement.
For disability, there are 3 kinds of disability determined by GSIS based on established medical standards. First is permanent total disability, PTD. Disability due to injury or disease causing complete, irreversible, and permanent incapacity that will permanently disable a member to work or engage in any gainful occupation, resulting in loss of income. The following disabilities are deemed total and permanent: complete loss of sight for both eyes, loss of 2 limbs at or above the ankle or wrists, and such other cases as may be determined and approved by GSIS. Eligibilities for permanent total disabilities. Members who become permanently and disabled are entitled to PTD benefits when in service at the time of disability, or if separated from the service but have paid at least 36 months contribution within the 5 years immediately preceding the disability, or have paid a total of at least 180 months contribution before the disability. Provided, however, that the following conditions are met: gainfully employed before the commencement of disability resulting in loss of income, not a registered member of any social insurance institutions, and not receiving any other pension either from GSIS or other local or foreign institution or organizations. Benefits for permanent total disability. Members who become permanently and disabled are entitled to the monthly income benefits for life equivalent to the basic monthly pension, BMP, effective from the date of the disability. In addition to the monthly income benefit for life, a cash payment equivalent to 18 times the basic monthly pension, BMP, will be paid to members in the service at the time of the permanent total disability and who have paid a total of 180 monthly contributions. Separated members who have at least 3 years service and become permanently and disabled but have not paid a total of at least 180 monthly contributions before the disability are entitled only to a cash payment equivalent to 100% of their average monthly compensation for each year of service with paid contribution, but not less than 12,000 pesos. The second disability is permanent partial disability, or PPD. This arises due to the complete and permanent loss of use of any of the following, resulting in the disability to work for a limited period. The following disabilities are deemed partial and permanent: any finger, one arm, one foot, any toe, one hand, one leg, one or both ears, hearing of one or both ears, the sight of one eye, such other cases as may be determined and approved by GSIS. Eligibilities of PPD, or permanent partial disability: members whose disability are partial are entitled to PPD benefit when in the service at the time of disability, or if separated from the service, have paid at least 36 months contribution within the 5 years immediately preceding the disability, or have paid a total of at least 180 months contribution before the disability. Benefits of partial disability. The entitlement period of PPD benefit is determined after due medical evaluation, but such a period of entitlement to the benefit will not exceed 12 months for the same contingency. Only the leave of absences without pay incurred during the entitlement period, duly certify the authorized officer of the agency where members are employed, is compensable. The amount of PPD benefit is computed by dividing the BMP by 30 days and multiplying the quotient by the number of compensable calendar days of leave of absence without pay, or LWOP. And for the third disability is temporary total disability. Accrues or arises when the impaired physical and mental faculties can be rehabilitated and restored to their normal functions, but such disability will temporarily incapacitate work or engage in any gainful occupation. Eligibilities of temporary total disability. Members are entitled to the TTD benefit when in the service at the time of disability, or if separated from the service, have paid at least 36 months contribution within the 5 years immediately preceding the disability, or have paid a total of at least 180 months contribution before disability. Provided, however, that the following conditions will be met: not a registered member of any social insurance institution, and not receiving any other pension either from GSIS or another local or foreign institution or organization. GSIS may extend the payment of TTD benefit up to a maximum of 240 days, subject to medical evaluation. The benefits of temporary total disability is the period of entitlement to TTD benefit is determined after due medical evaluation and proof of actual loss of work resulting in loss of income by way of the incurred actual number of days of leave absences without pay, duly certified by the authorized officer of the agency where members are employed. However, such a period of entitlement to the benefit should not exceed 120 days in one calendar year. Entitlement, however, starts from the 4th day of the disability. The amount of TTD benefit is computed by multiplying 75% of the daily salary of members by the number of days of disability, based on the medical evaluation, but not to exceed 240 days for the same contingency. However, the computed daily salary shall not be less than 70 pesos, but not to exceed 340 pesos per day. For survivorship, when members or pensioners die, Their beneficiaries are entitled to cash and pension benefits subject to the existing rules and regulations on survivorship and policies on the maximum amount of survivorship pension. The coverage for survivorship are all primary and secondary beneficiaries residing in the Philippines or abroad who are existing survivorship pensioners or claiming for survivorship benefit. Those who were receiving survivorship benefits but were suspended when the policy on the same was amended and implemented in August 2009, and those who applied for survivorship benefits but were disapproved due to the issuance or approval of management implementing guidelines on January 2009, dated October 22, 2009, took effect as early as August 2009, and MIG April 2010, dated April 26, 2010. For the eligibility requirements of survivorship is when a member or pensioner dies, the primary beneficiary or surviving legal spouse and dependent children or secondary beneficiaries, as the case may be, shall be entitled to the applicable survivorship benefits. The primary beneficiaries shall be the following: the legitimate spouse until she or he remarries or cohabits or engages in a common law relationship, and the dependent legitimate, legally adopted or legitimate children, including illegitimate children who have not reached the age of majority, or have reached the age of majority but incapacitated and incapable of self-support due to a mental or physical defect acquired before the age of majority. And the secondary beneficiary shall be the dependent parents and subject to the restrictions on dependent children. The legitimate descendants, the secondary beneficiaries, shall only be entitled to survivorship benefits if there are no primary beneficiaries. The maximum amount of survivorship pension is the surviving spouse shall be entitled to basic survivorship pension, which is 50% of the basic monthly pension, but not to exceed 50% of the current salary of an undersecretary. According to the Salary Standardization Law and its amendments, for example, if the salary of an undersecretary is equal to 63,380 pesos and the basic monthly pension of the deceased member pensioner is equal to 70,000 pesos, the maximum amount of survivorship pension is 31,690, because 50% of 63,380 pesos is equal to 31,690 pesos for the surviving spouse. Then the dependent children shall be entitled to dependent children's pension for a maximum of 5 children, equivalent to 10% of the BMP for each child, but not exceed 50% of the BMP, counted from the youngest and without substitution. The following are documentary requirements for survivorship. First, these are for the basic documents. Next slide is for if you are married. Next is single, if single. Next is if with a primary beneficiary with parents. Next is if without primary beneficiary without parents but with siblings. Lastly, additional requirements for Muslim members. For funeral benefits, funeral benefit is intended to help defray the expenses incident to the burial and funeral of the deceased member, pensioner, or retiree under RA 660, RA 1616, PD 1146, and RA 8291. It is payable to any qualified individual in accordance with the following order of priority: legitimate spouse and legitimate child who spent for the funeral services, or any other person who can show incontrovertible proof that he shouldered the funeral expenses of the deceased. Amount of funeral benefit. The amount of funeral benefit are as follows, with the prevailing amount approved by the Board of Trustees at the time of death of the member or pensioner. For uniformed members of the PNP, BJMP, and BFP, the amount of funeral benefit is fixed at 10,000 pesos. For employees' compensation benefits, the employees' compensation benefit or disability benefit is a compensation package for public and private sector employees and their dependents in the event of a work-related injury, sickness, disability, or death. EC is a purely employer-based contribution benefit. Thus, employees do not contribute any amount to the program. GSIS administers the Employees' Compensation Fund as provided for under Presidential Decree number 626. For the benefits of employees' compensation, there's medical services, appliances and supplies, rehabilitation services, temporary total disability benefit, permanent total disability benefit, permanent partial disability benefit, death benefit, and funeral benefit. There was an increase in employees' compensation benefits on May 26, 2014. President Benigno Simeon Aquino III issued Executive Order 167, which approved the increase of employees' compensation funeral benefit from 10,000 pesos to 20,000 pesos for both the employees in the private and public sectors, and a 10% across the board increase in employees' compensation pension for all EC permanent partial disability, permanent total disability, and survivorship pension in the private sector. In 2017, EC funeral benefit was further increased to 30,000 pesos under Executive Order number 33S 2017, signed by President Rodrigo Roa Duterte.
Other than the programs stated in the preceding examples, the Government Service Insurance System, or GSIS, has also offered many additional benefits and programs. Major additional programs include Pension Loan, General Insurance Program, GSIS Educational Subsidy Program, and GSIS Housing Condonation. Pension Loan. A pension loan is offered to qualified old age GSIS pensioners who have no outstanding service loans being amortized under the choice of loan amortization schedule for pensioners at the time of filing. As you can see on the left side of the slide, previously, pension loan may be availed based on the basic monthly pension and the pensioner's age as of the date of the application. So if the loanee is 70 years old, 20,000 only is his maximum loanable amount. But now, due to the pandemic, GSIS has enhanced its pension loan. They increased the maximum loanable amount to 6 times the monthly pension. Also, from the maximum loanable amount of 100,000, they increased it to 500,000 regardless of the pensioner's age. All qualified pensioners may now avail of the enhanced pension loan. Qualified are old age pensioners who are receiving their pension for at least a month, no outstanding service loans being amortized, and must also have at least 25% resulting in a net monthly pension after loan deduction. Note that the pension loan under the amended program will be charged interest at a rate of 10% per year calculated in advance. There is a 2% service fee on the total loan balance will be paid and deducted from the loan proceeds. And it is based on a 24-month repayment term with an effective interest rate of 19.747%. General Insurance. The Government Service Insurance System, by virtue of Republic Act 656 and as amended by Presidential Decree 245, is mandated to insure all properties, assets, and interests of the government against insurable risk. Thus, GSIS offers various non-life insurance products that provide protection to both institutional and individual clients. Under the institutional clients, the available insurance products are aviation, bond, marine hull and cargo, miscellaneous lines, and property floater. Aviation insurance protects against direct physical injury or harm caused by an aircraft's activities. In bonds, contracts of suretyship in which GSIS as surety guarantees the fulfillment of duty or undertaking in favor of the state as the obligee by another party, which is the principal or obligor. GSIS also insures all government cargoes in transit by land, sea, and air against loss or damage. Miscellaneous insurance includes livestock, fidelity grant, and extensive dishonesty, disappearance, and destruction insurance, as well as comprehensive general liability. And lastly, for institutional clients, the property floater, an insurance policy that protects movable property such as heavy contractors' equipment from direct physical loss or injury. On the other hand, for individual clients, including GSIS members, pensioners, and their dependents, the pension fund offers G-Care plans, an umbrella of products that include Home Shield, Auto Shield, and My Shield. My Shield is an insurance policy focused on personal accidents. In Home Shield, any household, company furniture, appliances, and personal fittings owned by eligible assureds are insured against fire under this scheme. And lastly, Auto Shield. Auto Shield provides comprehensive insurance coverage on all private use vehicles, including motorcycles and tricycles, at a 20% discount off the average rate, considering that the vehicles are in good operating condition. GSIS Educational Subsidy Program, or GSP, is the pension fund's response to Duterte's call to provide wider access to quality college education to the marginalized sector. It complements Republic Act 10931 or the 2017 Universal Access to Quality Tertiary Education, which provides free tuition and miscellaneous fees. So basically, GESP is launched to help low-income members send their children or dependents to college by providing a 10,000 yearly payment. GSIS opened GESP from March to September 2020 to accommodate as many participating members as possible. This program is open to all GSIS members with permanent employment status in salary grade 24 and below, having an updated GSIS premium payments and no outstanding or underpaid loan amortization for more than 3 months. Also, it must have a dependent college student in any year who have been admitted into or are enrolled in a 4-year or 5-year course at any university or college accredited by the Commission on Higher Education or CHED, considering that the student is not a beneficiary of any other educational or financial assistance program, and the applicant's dependent has a general weighted average of at least 80%, with no failing grades or missing marks in any subject during the previous semester or term of the academic year. The grantees will receive educational assistance until they complete their college course as long as they meet the scholastic requirements. And lastly, GSIS Housing Condonation. The State Pension Fund, Government Service Insurance System or GSIS, launched Housing Account Condonation Program. Under this program, GSIS is offering full waiver of penalties and surcharges to interested applicants who will pay their housing account obligations in full. This condonation program will lighten the burden of the members as it will allow them to settle their accounts without having to pay penalty charges from their unpaid amortizations. Qualified to apply for penalty condonation are active or inactive members as well as non-members with deeds of conditional sale or real estate loan accounts that are in default. Majority of GSIS existing housing clients stand to benefit from this program as more than half of its remaining 29,000 Housing accounts are for cancellation, foreclosure, or have incurred several months of arrears.
Okay, so let us move on to Chapter 4, Loans Offered. So the topics will be consolidated loans, policy loans, and emergency loans. Later on, I will explain each one by one. So let us talk about consolidated loans. I will give you a brief background. So consolidated loan, or known as Consul loan, combines 5 different loan products into one salary loan, restructured salary loan, enhanced salary loan, emergency loan assistance, and summer 1-month salary loan. So members availing of a Consul loan for the first time receive one-time automatic consignation from an outstanding penalties or surcharges incurred from these loans. The consolidation of the loans mentioned will result into a complete liquidation of the loans, outstanding balances, less penalty and surcharges, if any, which are automatically waived under the Consul loan program. So, I've been asked frequently, who are qualified to avail the loan program? Qualified for the program are active GSIS members, whether permanent or non-permanent, who have no pending administrative or criminal case, are not on leave of absence without pay, and with a net take-home pay that is not less than the minimum amount specified in the General Appropriation Act after the monthly amortized due on the loan has been deducted. So, the second frequently asked question is, how can members apply for the loan? Simply, interested members may apply through GSIS Wireless Automated System, or GWAP, kiosks located in all 37 GSIS branches and extension office, provincial capitals, city halls, selected municipal office, and large government agencies such as the Department of Education and the selected Robinson's Malls. So, as shown in the screen, this is the application form of the consolidated loan. You can download it also towards the internet. So, I'm gonna put the link in the chat box. The next topic will be policy loans. So, what is policy loans? So, the policy loan is a loan program which a member may avail from his or her GSIS life insurance policy. The loan, bearing an 8% interest rate, may be paid either through monthly amortization or deduction from a member's existing life insurance policy contract. So, in order to join, what are the qualifications? So, there are 2 qualifications. So, first is, members must have been insured for at least 1 year. The second is, members must also have updated premium payments with active policies. So, where you can apply. So, later on, for the next slide, I will show you the application form. So, where we can apply. Or how. So, members with GSIS E-Card or UMID card may apply for the Consul loan through the GSIS Wireless Automated Processing System. So, like the consolidated loans also, and you can also download the application forms. So, the pictures that are shown in the screen are the application form for policy loans. The last but not the least is the emergency loan. So, what is emergency loan? So, emergency loan is offered to members who are adversely affected by calamities, for example, typhoon, earthquake, volcanic eruptions, and other things. So the loan is payable in 3 years or through 30 equal monthly installments at an interest rate of 6% per annum. If renewed, the balance of the outstanding loan will be deducted from the proceeds of the new loan. So, what are the qualifications in order to avail this emergency loan? So, to qualify for the emergency loan, the member applicant must be, first, a bona fide resident or employee of the government office within the declared calamity area. Second, be in an active service or not on leave of absence without pay. Third, has no rearranges of the payment of mandatory social insurance contribution and has no loan that has been declared in default. Last but not the least, a calamity hit area must be declared under a state of calamity by Sangguniang Panlalawigan, Panglungsod, and or the National Disaster Reduction Management Council. That's all. This is the application form for the emergency loan. As what I have said earlier, now you can download this through Google, or I will put the link in the chat box. But